Welcome to the Cumbria Chamber of Commerce podcast, your regular update of business news and issues from around Cumbria. Find out how we support new business and help existing businesses to grow and flourish at cumbriachamber.co.uk. Now here's the Chamber's Business Engagement Manager, Julian Whittle, with the latest episode.
Hello, I'm here with Stephen Hunter and Anthony Cox, tax partners at RSM, the audit, tax and consulting service providers. Now, they were due to speak at the Chamber's Budget Breakfast in Kendal, which we were running in partnership with RSM, but regrettably, we had to take the decision to cancel because of the coronavirus outbreak. Bringing 130 people together in a confined space wouldn't have been the brightest thing to do at the moment. So this podcast is the next best thing, and Stephen and Anthony will aim to cover much of the ground that they would have done had the presentation gone ahead. So welcome, gentlemen.
Welcome.
What's your initial take on the budget? I mean, it was hard to believe that this was a Conservative Chancellor willing to spend freely after a decade of austerity. I mean, there was £600 billion worth of infrastructure spending announced. That's over 5 years. That's just infrastructure spending, and then there was the coronavirus measures and so forth. Is this the sort of budget, is it what you expected?
I guess we're in challenging times, aren't we? Even before we heard about the coronavirus, businesses were suffering. Obviously, a lot of talk around Brexit and the election and the uncertainty that comes with that. So I think most of your members will relate to the fact that it has been challenging, particularly for the retail and the hospitality sector. And then obviously we've had the breakout of the coronavirus, which has just compounded that. So I guess what I've been pleased around the budget is the fact that we've made some swift changes, and we're bringing in more funding to help businesses along the way. But I agree with you. I think there's been a lot of spending, or promises to be spending, but not many tax changes to bring the money in. So so they're going to be able to meet this through growth, and obviously through extra borrowing.
And I think it's fair to say that the government did indicate that they would spend quite a lot of money on infrastructure.
They did in the manifesto. They flagged that up, Stephen. Yeah. Well, Anthony, you just mentioned there the coronavirus measures. I mean, the first part of the Chancellor's speech was devoted entirely to measures to help businesses survive the coronavirus outbreak. Can the two of you talk me through these measures?
Yes, I guess there's 4 measures broadly that have been introduced or will be introduced to help businesses along this difficult period. One is the business rate exemptions that are available for the smaller businesses. They've been extended to make sure that we're covering both leisure, hospitality and retail.
That's up to 250 employees, isn't it? I think
it's rateable value.
Oh no, sorry, yes, I'm getting confused with one of the others. Yes, you're right. It's rateable value under 51,000, isn't it?
That's correct, yeah. So we're not sure how that's going to be administered because the councils haven't received the instructions yet. But it might be that some of your members that meet that criteria will need to apply to their local councils, but information is going to be provided to the councils on the 20th of March.
Right.
So that's been extended from retail to pubs and leisure and hospitality,
yes,
which should help Cumbria a lot.
Yes.
And in particular on the pubs, the discount of £1,000 has been increased to 5,000 discounting rates. So that's one measure to have a look at for your members. The other one is around the statutory sick pay. And up to 250 employees, there will be funding available for the first 14 days that a person is off with the coronavirus.
So they'll get the statutory sick pay that they pay out reimbursed by the government. Yeah.
And again, that hasn't really been determined how that's going to be refunded at the moment because the payroll systems can't cope with that at the moment. So we're going to see how that transpires. There might be a bit of delay on that.
Oh, right.
I think the one that probably is available immediately is the time to pay arrangements, which historically have been quite difficult to enter into with HMRC. The Chancellor announced yesterday that 2,000 employees will be manned on the phones. There is a phone number now, so it's up and running. And that would probably be my first port of call because money is available now in terms of deferring some of your cash flow.
So you think that might be it'll be easier for businesses to access that scheme than it might be at the moment?
Yeah. And what I would say is that please speak to your accountant, your local accountant, to to help you with that process.
Okay.
And the fourth one really is the grants and the loans that are going to be available. That's going to be administered by the British Bank, which has got 40 high street lenders on the
British Business Bank, yeah. And so you would you contact, if you wanted to, if you're a business, you're interested in these, I think it's up to 1.2 million, aren't they? So they're decent amounts of money. Would you approach your normal bank and say, are you one of the lenders on this scheme?
Yeah, I think I would. And I think the key thing to mention is this arrangement for banks to lend on behalf of the British Bank has been set up already. It was called the Enterprise Finance Guarantee Scheme.
Yeah. That's
going to be relabelled to the Coronavirus Business Interruption Scheme.
Right.
So what I would say is that it's up and running.
Yeah.
There is support. I think the difference is that the government's going to guarantee 80% of the lend. So the bank should be well versed in this in terms of lending under this arrangement. So I think, again, I would speak to your local bank manager. I would speak to your accountant again and decide how best to approach the funds that you need.
And for the smallest businesses, there's some £3,000 grants as well, aren't there? I think.
Yeah, for small businesses that have currently got the exemption for business rates.
Yeah.
I think the key, what I would say to my clients and people and your members is that I think you've got to be on the front foot here. I think you've got to look at your cash flow over the next 6 to 12 months. If you do think there's going to be some challenges in there, you've got to be on the front foot on this and make sure that you're speaking to your accountants and you understand what your cash requirement's going to be. And you put some contingency plans in place.
I mean, it struck me because this time last year, we were helping businesses plan for a no-deal Brexit, and a lot of the sort of Brexit planning about managing cash flow and looking at your supply chain in case that gets interrupted, it's applicable for coronavirus planning as well, isn't it? It's a similar scenario. Yeah. The business rates relief, I mean, it's 100%, but it's only for the eligible businesses in retail, hospitality and leisure, but it is only for a year. Now, the Chancellor did mention a fundamental review, which is, I think, a phrase he lifted from the Conservative manifesto, but he's not the first Chancellor to promise one of these. I think George Osborne did when he was Chancellor. We still haven't had one, but he did indicate that we might hear more in the next budget, the autumn budget. What do you think? What do you expect to appear in this review, and how do you think business rates might change as a result of it?
I think that's quite a difficult question to answer with any certainty at this point. I think there's a vast amount of money involved with business rates, and I think anybody who has any views on how it should be dealt with needs to take part in the consultation process with government and try and influence as much as possible what they feel is the right outcome. I think at the moment it's really difficult to predict.
I mean, it's difficult. So we looked at this as a chamber a few months ago, and business rates raises so much revenue that if they wanted to do away with business rates and jack up corporation tax, it would have to go from 19% right up to, I think, about 30% or something,
yes.
In order to raise the same amount of revenue. So it's really going to be a difficult circle to square if they are going to reform.
Well, of course, we've also got the situation that this budget includes a digital services tax at 2% of revenue for large businesses that deal mainly through the internet.
And they've been very adept at avoiding corporation tax, haven't they?
They've been adept at avoiding corporation tax, and so it remains to be seen whether that's successful or whether that needs to change in the future in line with international changes in how those companies are going to be taxed and how much money is raised. I suppose if there's a lot of money raised from that might help with the business rates.
Yeah.
I think I agree with all that, and I think clearly if business rates are abolished, then a new tax system needs to be in place. But I think what your members should be asking themselves, or actually thinking about, is actually they need a fair system. If you've got a business on the internet or you've got a business in the high street, there should be a level playing field. And I think when the system is eventually reviewed, it will have that in mind. And as long as that can be achieved, then I think that's the best that we can hope for.
Yeah, well, we'll have to wait and see on that. Now, alongside you almost got eclipsed by the budget, but earlier on, before the Chancellor got up to speed, the Bank of England had announced a cut in the base rate from 0.75 way down to 0.25%, which it has been there before, just after the Brexit referendum, but it's never been any lower than that. It is a record low. What impact do you expect this cut to have on the economy? And I wondered, has the bank used all its ammo in one go? I mean, what else can it do if it needs to stimulate the economy a bit further down the line?
Well, there's not a lot it can do on interest rates, but it's got the base rate at 0.25%. But I suppose it could still do things like quantitative easing.
Yeah.
So there are still things that the bank could do if it needs to do later on.
I mean, I personally think it's the right measure to do, given the circumstances that we are and the challenge that we're going to have in the next 3 to 6 months dealing with this virus and the effects of that. So it's a bold move. The banks obviously will pass this on, or should pass this on to your members. And I think there'll be an immediate cash flow advantage of a fall in interest rates. And what I would also say is that banks have done press releases and have said that they're here to support their clients, whether that's holidays from making payments from mortgages or interest in. So again, there are means of easing cash flow, and banks have been supportive around payment holidays in that respect. I think for consumers who have been used to lower interest rates for their residential mortgages, that probably not many of those will be affected by this because they may well have locked in at fixed interest rates. But certainly businesses will take advantage because their rates will generally be variable.
Okay. Now, the Chancellor believes the coronavirus outbreak will have a significant impact on the economy, but he also said it would be temporary. Well, presumably he's right on that, but I wondered how quickly you think businesses will bounce back. I mean, once the outbreak is contained, will it be back to normal, or will some businesses be mortally wounded, as it were, by what they've suffered?
I think it's very difficult to say because these are uncharted territories. I think it will be temporary, and I think business will generally bounce back, but it's really very difficult to predict.
Depends how long it goes on, I suppose, doesn't it?
Yes, and it will affect some businesses much harder than others, I suppose.
I mean, sectors like hospitality, for example.
Yes, that's right. Hospitality in the Lake District is already recording cancellations, and they could be, badly affected.
Yeah. Now, the Chancellor reiterated one of the Conservatives' election manifesto pledges to keep raising the the national living wage, as it's called, for over 25s. Now, the increase to £8.72 an hour this April will mean it's risen by 30% since 2015. His intention is to get it to 2/3 of median earnings by the end of this Parliament. So it's quite possible that we could be looking at an hourly rate of £10.50 by 2024. How would you advise businesses to respond to that? And are there any particular sectors that this is going to be a major problem for?
Well, I think clearly it affects the tourism and hospitality sector quite markedly, and really the only advice I think you can give to businesses is that they all have to cope with it and comply with it. The last thing you want to do is not be complying and be found out and named and shamed, as it were. Yeah. So I think it's really important that people do comply with it, and it's a good thing in many respects because it's important for the people to receive this minimum level of money.
Yeah, I mean, the sector I was perhaps thinking of was retail, because they've got a lot, and of course they're already, we've just been discussing over business rates, the issue of online competition, and they tend to, that it might accelerate. Pub closures is another one, still obviously not back to hospitality there. We did some research as a chamber when the Low Pay Commission came up to Kendal, I think 2 years ago now, and the businesses were telling us, it's not just the staff on the minimum, because if you give your lowest paid workers big increases percentage-wise, then they start catching up people who have got a bit more responsibility, and then they say, well, hold on, I want to rise too. Otherwise,
Yeah.
they're getting paid the same as me, and I'm doing more. So it has this knock-on, this domino effect for a lot of businesses.
I think that's absolutely right. I think it's difficult times at the moment, and the cost base for retail and hospitality is increasing. And we just talked about the national living wage or the minimum wage. We talked about business rates earlier. There's a lot of cost rising in the base, and I think all we'd say to our clients is, quite as Stephen said, they've obviously got to adhere to the policy because HMRC will come and do checks, and there's a naming and shaming. I think the key thing is to have visibility of your cash flow, and to understand if you've got pressure points and how you need to deal with them. So that'd be my recommendation, is to make sure that you're keeping an eye on your cash and you're taking advantage of the help that's out there to get you through this period and future periods.
Okay. Now let's get on to the tax measures. I mean, you're both tax specialists. I mean, are you disappointed it wasn't a bit more radical in terms of tax? I mean, a lot of the things we knew. I mean, we knew the national insurance threshold was going up, which he duly did. He froze duties on fuel and alcohol. Fuel duty would be very welcoming. Freeze would be very welcome in Cumbria. He's not done anything to income tax personal allowances. The corporation tax level, which again, this was flagged up, wasn't it, before the budget, that they weren't going to cut it to 17, which was the original plan. And there was a speculation that he was going to do away with entrepreneurs' relief. Now, he didn't, but he did curtail it, didn't he?
Yes, he did. Before the budget, it was a situation that you couldn't sell your company, and on up to £10 million worth of gain, you would pay only 10% tax. And that was given to you by Entrepreneurs Relief. And the change in the budget is that 10 million is reduced to £1 million.
Yeah.
Now, I mean, I think it's a good rate of tax, 10%. And I think for the vast majority of people, £1 million is a lot of money. So I think most people will see it as a relatively fair change, and it's still available for gains of up to £1 million. So I think the message actually is that it hasn't been scrapped, it's still there, and it's still quite valuable. It's worth £100,000 if you make £1 million disposal.
I mean, most of these disposals, would I be right in saying it happens when somebody wants to retire and they decide to sell the business?
Sell the business, yeah.
Yeah. And the vast majority of business sales, by number, are for within the £1 million gain range,
right,
aren't they? So,
and it's per individual. So it could be that in a family situation, you might have a husband that gets £1 million, a wife that gets £1 million, and maybe even if it's a family business, you might have later generations also holding shares. So in actual fact, you could still find yourself with several £1 million covered by the relief at 10%, which I think most people would see as being quite reasonable.
Yeah.
And I think what I would add to that is it's quite usual in owner managed businesses and private equity businesses for management to have shares as well, or share options. And one of those is the enterprise management incentive, the EMI scheme. And that enables employees to get a 10% tax rate if they meet the qualifying conditions of holding the option or the shares. That's still going to be available, the entrepreneurs relief, for people who have gains of up to £1 million. So it's still good news when it comes to employees as well, holding share options.
I mean, another area where we thought he might clamp down was pensions tax relief, but he hasn't. Not only has he not done, he's actually gone the other way, hasn't he? It's more generous than it was.
Yes. So the issue with pensions tax relief, and this was affecting a lot of doctors and consultants in the NHS, was that when they earn more than £150,000, they effectively lost the ability to put money into pension schemes. So apparently, this was causing people not to go into work because they weren't getting the ability to pay into pensions. It cost lots of money effectively to work those extra hours. So the change has been to increase that 150,000 to 240,000, which will largely help those NHS consultants and doctors. There is a restriction though, in that previously people large earners over 210,000 were allowed to put £10,000 in. Now, if you earn over £312,000, you will only be able to put £4,000 in.
Right.
So it has been restricted slightly, but for these big earners, though everybody needs to look at their own affairs, but they may find that they're able to contribute £40,000 a year again into their pension, which I think is quite a good thing.
It is. He's raised the R&D tax credit from 12% to 13%. I mean, Anthony, explain how that works and how businesses can benefit.
I guess in terms of how business can benefit, I think within your business, if you're involved in a project that is aimed at achieving an advance in the overall knowledge or capability in the field of science or technology, that's obviously a long phrase, but what it really means is if you're involved in a project and it's difficult, there's a lot of uncertainty about, it's taken a period of time, then you could qualify for this relief. And to give you some examples of that, it might be that you're trying to produce a cheaper product. So you introduce a new material, and that new material doesn't integrate very well with the rest of the other items that are in that make up that product. That could be R&D. Situations where there's food and beverage companies where they're trying to introduce low salt or low sugar, and they want it to taste the same. Again, that could be R&D. So if you're developing a new process, that could be R&D. And even in the areas of systems integration in terms of IT, there could be technological uncertainties and challenges that make up there. So anybody that's involved in any of those types of things should be asking their questions of their accountants. Could we get R&D tax credits on this?
Yeah, well, because I suspect that maybe some businesses think that if they haven't got a department of boffins with white coats, that we don't do R&D, but in fact they do. And they could be eligible for that.
I think you'd be surprised how many different businesses can actually do R&D. I often think that a successful business is almost always doing R&D, and that's usually quite often the reason why they're successful.
Yeah. So in terms of the actual change, there's two types of scheme. There's the small and medium-sized enterprise scheme, which is generally, well, it's obviously for smaller businesses, as the name suggests, and the key there is about 500 employees. So if you've got less than 500 employees, you claim under the small and medium enterprise scheme. This particular change relates to the large ones, so it's the businesses that have got more than 500. There's a few other criteria, but that's sort of the basic rule. So what way this relief would work is that for every £100 that you spend, previously you would have got 12 back, you now get 13. So it's increased from 12% to 13, and that's how the relief works under the large scheme.
Okay. Now, I must have to confess this was a new one on me. The structures and buildings allowance, it rises from 2% to 3%. What is that, and will the increase make much difference?
This was first introduced on the 29th of October 2018, so it's been around for about 18 months. Originally, when it was introduced at 2% straight line. So you get your tax relief over 50 years, and if you sell the property or the item that you're claiming the relief on, you transfer that at tax written down value, which means that there's no clawback of your relief.
So is this on any new building or an extension or anything like that?
Yeah. So what's it available on? It's available on new structures that are being constructed or buildings, including conversions as well and extensions. Yeah. And I think one that gets missed quite a bit is obviously on refits. What I would say is that there is a capital allowance regime that you would qualify for tax relief on plant and machinery or fixture and fittings. So this deals with the things that are really buildings that you couldn't previously claim any tax relief on.
I see.
You can now. So it's good news because it's increased from 2% to 3%, which means you get your tax relief over 33 years as opposed to 50. So it is good news, yes.
Yeah. And another one that he mentioned, the employment allowance, that's up by a third to £4,000. Talk me through that and what it entails.
So anybody that employs people at the moment will be claiming a employment allowance of £3,000. From April of this year, that will go up to 4,000, as you stated, but it will only be available. There'll be a cap. There's a limit introduced. So if your employer contributions are more than 100,000 a year, you'll not be able to claim the employment allowance. So it's really it's increasing the benefit to smaller businesses again.
You're right.
And that would broadly, I think Stephen and I worked it out before, you may be around 35 to 40 employees.
Depends on the amount of money that they earn.
Before you're affected by that.
Before you're affected.
Right. He abolished, we didn't see this coming really, he abolished relief for red diesel with exceptions. Farming, fisheries, forestry, railway sectors, he mentioned, are not hit by this and carry on getting the lower rate of duty on red diesel. So explain what it is and who else? Who's going to be affected by this? Because who else uses red diesel?
Well, this change comes in April 22, so it's still a couple of years away.
Right. Yeah.
And for people who use vehicles just off road, then they use red diesel as opposed to white diesel, and they don't have the large taxes that go with the red diesel, so it's much cheaper.
Yeah.
So, as you say, this is going to carry on. It's already agreed that this is going to carry on for certain sectors like farming. The sort of businesses that we think we've identified as perhaps being affected might be caravan parks, unless they can somehow get into the definition of farming. It doesn't sound very much like farming, does it?
Good luck with that, yes.
Good luck with that one. But actually, the caravan park industry has a very strong lobby with government, so it may be that they can negotiate in something at a government level, or the other industry. I think construction industry uses quite a lot of vehicles.
Of course, yeah.
Off road, and uses quite a lot of red diesel, and I suspect they might struggle to get any exemption.
Right, yes, I get that.
But it's quite a big increase, I think. It's a big increase in costs for these people.
I think they're only paying 11p a litre duty on red diesel, so it's much less.
Much less, yeah.
Are there any other tax changes that either of you would want to highlight?
I think in terms of encouraging investment and the environmental aspects, electric vehicles are receiving 100% capital allowances on at the moment.
Right.
And as the longer the range in terms of the miles that they do, without needing to recharge, there are going to be some low benefit in kind rates of starting about 2% in the next year. So I think there's certainly some tax incentives around moving to electric vehicles, and I think I've spoke to a number of my clients recently, and they're all moving to electric vehicles for the tax reasons. So they are working, and I think the other thing is obviously the plastic agenda at the moment. They are looking to introduce a plastic packaging tax, which won't come in for a while. But what it's trying to do is encourage people that use plastic packaging to produce their plastic packaging from 30% of recycled plastic. Okay.
I think there's a couple of things which have already been talked about, so weren't given a lot of mention in the budget, but are coming in from April that people do need to not lose sight of.
Yeah.
And one of those is what people refer to as IR35. So IR35 was actually something that was originally brought in 2000, but has never been really applied by HMRC.
This is the contractors thing, isn't it?
This is the contractors thing. So essentially, if it will largely impact you if you employ somebody, but don't employ them on the payroll and you pay them through, say, their personal service company. That's a typical example of somebody who's caught. And this was brought in for the public sector a couple of years ago. Yeah. It's now come in for the private sector, and essentially all businesses need to review all these sort of people, all their contractors, before the beginning of April.
Am I right? The change means that the employer is now liable.
There is a risk that you, as the employer, will become liable for the pay as you earn and if you don't.
If HMRC decides they're not a genuine contractor and should be on the payroll, the employer will be liable.
Yes, but the obligation is on the companies, the paying companies, to work out whether or not these are employees or not.
Yeah,
it's not. So it's a bit like self-assessment. You have to work it out yourself whether you're caught So that's one thing.
And just to add to that, what we're seeing certainly from large employers at the moment, they're taking these contractors and making them employees.
Yes.
Or they're encouraging them to sign up with umbrella companies, which will obviously employ them and provide their services to the end user. So they're what we're seeing on the contractor side.
Which I'm sure a lot of the contractors are not very happy about, because they were probably quite pleased with the arrangement.
Yes.
Yeah.
So another couple of changes were, one of them is that there hasn't actually been a change to inheritance tax. There was a lot of discussion about there may being some change, a quite radical change as well, but that may come in the autumn. It may not. We don't have any indication at the moment. But from April this year, it will be possible to get £1 million lifetime allowance for a couple, but you do have to make sure that you meet the conditions, because and that's quite a big allowance when you compare it to, say, 10 years ago before it was introduced. But it's been phased in, but it's now fully in from April 2020.
Well, I mean, what we've got in front of us here is what do you do now following the budget? And we've got a checklist that we've sent to our clients. So we're happy to share that with members if that's what you want us to do.
Okay, we can do that. And the maybe one other thing to touch on is we talked about the structures and building allowance. Are there any other capital allowances that you want to flag up?
I think I guess one of the important reliefs for capital allowance is the annual investment allowance, and that's been maintained at £1 million for the next year. So I think that'll mostly cover most expenditure that your members will have. I think the other thing I would probably say is the enhanced capital allowances on energy efficient products is ceasing from April. But I think other than that, I think we've covered most of the things. There's an enterprise zone as well.
Because there is one in Carlisle, so
Yes.
that's continuing, isn't it?
Yes.
100% relief there.
So there are other changes which have already been announced, which come in from April. So, for example, if you sell a residential property, normally if it's your home, you claim principal private residence relief, so you don't pay any capital gains tax. But if you sell a residential property which isn't your home, so you have capital gains tax liability, from April 2020 you will have to pay capital gains tax within 30 days of the sale, which is a change and is quite an unusual change, and one that people will easily miss.
Yeah, because they won't necessarily be aware of the obligation.
No, they won't be aware of the obligation, but that is coming in from the beginning of April.
I don't necessarily even tell their accountants until the year end either, do they?
I think that's the point.
problem.
That's the point, and it's about how you quantify it as well, because you've got to quantify what the gain's going to be.
Yeah.
Right, well, thanks very much for that, gents. But I'd like to finish by putting you on the spot and asking you to make a couple of predictions. First of all, on the economy, I mean, the growth forecasts that the Chancellor cited from the Office of Budget Responsibility were quite modest. I think 1.1% growth this year, and then I think 1.8% the year after, and then hovering about 1.5% for the rest of the Parliament. But I mean, the caveat he made was that those projections were before we knew the coronavirus was going to come along. Where do you think the economy will go? I mean, do you think we'll see any growth this year? And do you think the UK economy will be able to avoid a recession?
I think it's going to be difficult. I think it all comes down to how quickly we can deal with the coronavirus. I think the longer it goes on, the more certainty that we're going to end up in a recession, which I guess is obvious. But I think it's going to, given all the headwinds that we've had around Brexit, around the election, consumer confidence, the coronavirus, the fact that the FTSE's priced in difficult times, and that's at, I think, 5.5 at the moment. I think it's going to be difficult to do. I think if we do achieve it, and let's hope we do, it'll be an amazing achievement to get the growth this year.
And the other one, what struck me about the budget was, yes, loads of spending, additional spending, and it's very little additional taxation to fund that. So it's obviously there will be more borrowing. But I wonder, do you think he's avoided, if we hadn't had this coronavirus outbreak, he might have introduced more tax increases in this budget. But he obviously thought that given how weak the economy is, he daren't do that at the moment. So do you anticipate that there might be a sting in the tail, and maybe in the autumn budget, or even if the economy is still weak, then he might leave it till next year? But do you think tax increases are coming down the line?
I think the key thing is to get through our current predicament, isn't it?
Yeah.
So I can understand the statement you've just made. And I think once we got through that, I think if you look at the Tory manifesto, it was very clear that there was going to be no increases in the rates of income tax, VAT and national insurance. So to a certain extent, his hands are tied. But these are difficult times, and he might have to break those rules to balance the books. But I think if we've got low growth, not much, because the economy's not doing well, there's not much take in terms of tax take, then borrowings are going to shoot up. And it's just a question of how he deals with that. But I wouldn't rule out further tax increases in the future. Yeah. But I think the immediate, I think he's right in what he's doing. I think the immediate action is to stimulate business, put the investment in, and let's get out of this predicament that we're in.
Would you add anything to that, Stephen?
No, I agree entirely with what Anthony said there.
Great. Well, look, thanks very much.
Okay, thank you.
Thank you for listening to the Cumbria Chamber of Commerce podcast. You can find out more about how we're supporting Cumbrian businesses at cumbriachamber.co.uk and cumbriagrowthhub.co.uk. In the meantime, thank you very much for listening, and watch out for the next episode, which we'll be releasing very soon.